Hello class, and welcome to the video lecture for Accounting for Bad Debts. The second learning unit covers two different ways of estimating the amount of bad debt expense to use in the journal entry you learned in the previous learning unit. The journal entries you learned in the beginning of the chapter are part of what's called the allowance method of accounting for bad debts. Using the allowance method, the business estimates the amount of bad debt expense at the end of the year. There's two approaches to coming up with this estimated amount. One is called the income statement approach, and the other is called the balance sheet approach. First, let's look at the income statement approach. It's called the income statement approach because it uses net credit sales, which is listed on the income statement. In this example, the company estimates that 1% of its net credit sales will be uncollectible. To determine net credit sales, take the total sales that were sold on credit. Then subtract any sales returns and allowances and sales discounts related to those sales that were sold on credit. So we have $95,000 minus $10,000 minus $5,000, which equals $80,000. 1% of $80,000 is $800. Now we have the amount, and we journalize that as an adjusting entry with a debit to bad debt expense and a credit to allowance for doubtful accounts. Because allowance for doubtful accounts is a permanent account, the balance carries over from year to year. In this example, $100 was already in the account. Now we add our estimate of $800, and the new balance is $900. Now let's look at the second approach, the balance sheet approach. It's called the balance sheet approach because it's based on accounts receivable, which is a balance sheet account. The first step is to prepare an aging of accounts receivable. The first column is a list of all the company's credit customers. The second column is each customer's total balance. The third column is how much of that total balance isn't due yet. The last four columns are the amounts of the customer's total balance that is past due and by how many days. The last row is just informational at the bottom, showing how much of the amount due in each category as a percentage of the total amount due by all customers. It's not used in our calculations. Now we create another table that lists the days past due and totals for each one. The third column is the percentage that the company estimates will not be collected. These percentages are based on past history and are a management decision. Notice the over 90 row. The company estimates that 50% of that amount will never be paid. The final column is the amount multiplied by the percentage. When we add all these up, we get a total estimated amount of $480. This is what the allowance for doubtful accounts account needs to have as an ending balance. Since we already have $100 in the account, we only need to add $380. This is the difference than the income statement approach in that you must consider the amount in the allowance for doubtful accounts account. When we use the income statement approach, we just added our estimate. But using the balance sheet approach, we only add as much as we need to make the balance equal to our estimate. Now we have our adjusting entry. We debit bad debt expense and credit allowance for doubtful accounts of $380. Now I'd like to do a couple problems from the textbook. Exercises 13B-2 and 13B-3 on page 513. 13B-2 on page 513 says, journalize the adjusting entry on December 31st, 2012 for bad debt expense, which is estimated to be 2% of net sales. The income statement approach is used. they give us some information in the form of T accounts. So first, let's determine net sales. Now remember, net sales is sales minus sales discounts minus sales returns and allowances. So we have our sales amount, which is given as $113,000. So we subtract out sales returns and allowances, which is $540. And we also subtract sales discounts, which is $9,100. So our net sales is $103,360. Now they don't tell us that these are credit sales, but the textbook is simplifying this for us, so we can just assume that they are. They're not going to complicate it by throwing in cash and credit in the same problem. So now that we have net credit sales, let's determine the amount of bad debt expense. So the company estimates it to be 2% of net sales. So we multiply this 103,360 times 2%. And that, if you plug that into your calculator, is $2,067.20. Now, MyLab, when you enter this into MyLab, it's going to tell you to round it to the nearest dollar. So what we're going to enter in MyLab is going to be $2,067. So let's look at the journal entry. Let's journalize this. Now the adjusting entry is always the same. Bad debt expense. I'm going to abbreviate here. So we debit bad debt expense for $2,067, and we credit allowance for doubtful accounts, which I'm going to abbreviate AFDA because nobody likes to write that out. Allowance for doubtful accounts, $2,067. Okay, now I'd like to enter this into MyLab. So I'm going to switch to my browser here and log into MyLab so I can enter this into the problem and show you how MyLab works. The problem I'm doing now is 13B-2. So I'm going to go ahead and click on that problem here. Oh, it snuck away from me. So this is what you'd see in MyLab. You've got problem number 1, problem number 2. Over on the right hand side it tells you which problem it is in the corresponding to the textbook, and it is the problem that we just did. And remember, we already did our calculations, so it's asking us to journalize the entry, and I already put the date of December 31st in here. And I've clicked the arrow to get the drop down menu, and I've chosen bad debt expense because that is the account I want to debit. And remember, debits are entered first in journal entries. And I'm going to click over in the debit box, and I'm going to put in the number that I calculated. Now notice it says here round to the nearest dollar, so I've done that. If I don't round to the nearest dollar, MyLab might tell me it's incorrect, so you want to make sure that you follow the instructions that are given. So I'm going to put 2067 in there. Then I'm going to click in the next box under accounts, and I'm going to choose the account I want to credit, and I want to credit allowance for doubtful accounts, so I'm going to click on that, and in the credit column I'm going to enter 2067. Okay, so there's my journal entry. I'm going to click check answer at the bottom, and it says excellent. Oh yay. So now if I had been having trouble with this, I might have used the help me solve this button on the right hand side here. See, I just clicked on that, and what it does is it gives you a similar problem and takes you through it step by step. It's very helpful. If you get stuck and you're not sure what part of your calculation you're on, try the help me solve this function and work through a problem step by step. I'm going to go ahead and close that. I'm going to go back to my writing pad right here so we can do problem 13B-3. So 13B-3 says, assuming that in exercise 13B-2 the balance sheet approach is used, prepare a journalized adjusting entry for bad debt expense. Based on an aging of accounts receivable, an $8,000 balance in the allowance account will be needed to cover bad debt expense, to cover bad debts. So let's look at the current balance in the allowance account. And I'm getting that from the problem above. It shows us a T account for allowance for doubtful accounts. Shows us a T account with a $4,700 balance. Now the problem tells me that an $8,000 balance is needed. So I already have $4,700. So if we need the balance to be $8,000, we determine the difference between the old balance and what we need it to be. So I'm going to take $8,000 and subtract the $4,700 that I already have. Oh, whoops. Too many zeros here. I'm going crazy with my zeros. And now I can't get my eraser to work. Sorry about that. Oh, technology. Okay. So I get $3,300. So my journal entry, again, now what do I debit? It's always the same thing. Bad debt expense. Debit for $3,300. And I'm going to credit allowance for doubtful accounts, $3,300. Okay, so how about I put that into MyLab. Okay, so I'm still in my homework, and I'm going to click on number 2 here to go to the next one. And I see on the right here that it is, in fact, exercise 13B-3. To journalize the entry, I'm going to use the drop-down menu, and I'm going to choose a debit for bad debt expense, and the amount I'm going to enter in my debit box here is going to be $3,300. And then I'm going to click on the second line and choose the account to which I'm going to credit, which is allowance for doubtful accounts. And then I'm going to enter $3,300 in the credit. Oops, $3,300 in the credit box. And now I'm going to check my answer. And it tells me fantastic, which means I did it correctly. Okay, so that concludes Learning Unit 2. In the next Learning Unit, we'll cover writing off accounts in more detail.